Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trading view with over 190k reputation points. In today's video, I will be speaking about the best trend lines trading strategies. Now, these are very important concepts, so make sure you stick to the end of the tutorial. And without further ado, let's get straight into it. Now, the first thing that we have to speak about when it comes to trend lines is how to actually draw them. Because if you don't draw your trend lines correctly, then it's pointless to have then the next steps of a strategy because it will be wrong from the beginning. Now, when it comes to drawing trend lines, you will hear a lot of people that will tell you that you're supposed to be using the lows, okay? So let's say, for example, that you have a situation like this, okay? Let's say you have a situation like this. The market has created the first low here, then you have another low here, and another one here, okay? Now that you have 3 touches of this trend line, at that point, you can consider this a strong trend line, okay? And many people will tell you to just put it on the lowest level here, the lowest level here, and then the third one will just follow. Now, this can be accurate in many cases, but it is not the most accurate way of drawing a trend line. And we can see this clearly by looking at how the market behaves. In fact, if we keep going here, we can see how the market didn't stop at the trend line. It actually stopped before. Now, if you're asking yourself why that is the case, that is because most of the times the market will actually stop at the level that has the highest confluences. Now, the highest confluence when it comes to the trend line comes if you are touching as many candles as possible with the trend line itself. So, for example, if you draw it in a way like this, okay, you actually added several new touches to this trend line. Why do I say this? Because here is still only one candle that is touching. Here is actually 2 because now it's touching 2 candles. Here, what we can see is that it's not touching only this one, is actually touching another one. And here, the market, we can see that tested a trend line and rejected it to the upside. Now, this brings me to the second point. You must touch with your trend line as many candles as possible without cutting the bodies. What do I mean? Now, until you were at this level, okay, you were in this situation, you had 1 touch here, 2 touches here, another 2 touches here. So in this case, you had only 1, 2, 3 candles that were touched. In this case, you have 1, 2, 3, 4, 5. So this is the most accurate trend line in this case. So you expect the market to go and test it around this area and then reject it to the upside. The problem is that after this, we are now cutting the candles, the bodies of the candles, because as I just said, you have to touch as many candles as possible without cutting the bodies. Now, in this case, what happened is that on this test, the market actually did move in a way that made your original trend line cut these bodies. That is the moment in which you have to adjust your trend line. And the way in which you adjust your trend line is, once again, nothing really changes. You are still going to have to place a trend line which is touching as many candles as possible, but without cutting the bodies. Now, in this case, it will be this one here, because once again, you're touching as many candles as possible without cutting the bodies. Now, this will basically be the trend line that the market is supposed to respect, meaning that when the market will go and test this trend line once again, we expect it to reject it to the upside. So when it comes to trading any kind of trend line strategy, as usual, the trend lines are supposed to go on the directional timeframes. Now, the directional timeframes are monthly, weekly, and daily. Then when it comes to looking for potential setups and potential entry rules, that is usually on the intraday timeframes. This is the most common practice on most trading strategies. Now, this means that there are two ways in which we can trade a trendline trading strategy. Either we are trading a bounce away from it, or we are waiting for the break of the trend line, and then on the retest, that is when we are dropping down in the lower time frames for a potential valid entry and a short trade in this case, or a long trade if you're breaking a bearish trend line. So we can see here that the next time that the market goes and tests this trend line, clearly the market, instead of starting to reject to the upside, it breaks below the level. Now, the moment in which the trend line gets broken to the downside, so the moment in which, in this case, since we're on the daily time frame, the moment in which from a daily perspective, you have a close below the trend line, now we are shifting from having support at this trend line to having resistance at this trend line. And as for a horizontal structure level, when you have previous resistance and it gets broken to the upside, it becomes support. When you have previous support and it gets broken to the downside, it becomes resistance. So also in this case, after the break below the support, what we can expect is a retest of the trend line as new resistance, and then the rejection high, the rejection lower. So in this case, if the market goes and retests, that is where you will have to incorporate a series of rules from an intraday perspective that define a valid entry for you for a short trade. Now, we can see in fact how the market just tested this trend line as resistance, respected it because it didn't close above it. It actually is respecting it as resistance. And we can see how immediately the market started rejecting the level to the downside. Now, when it comes to the directional aspect, this is what you have to know. You have to know how to draw the trend line, and you have to have a series of rules that define a valid entry for you from an intraday perspective. So you can draw the trend lines properly, as I just showed you, touching as many candles as possible without cutting the bodies on the monthly, weekly, and daily. And then to actually build a strategy, you need also risk management rules and valid entry rules, possibly on the intraday timeframes, which are more accurate for that scope. And you will basically have a series of rules that indicate if you're trading the bounce or if you're waiting for the break. And on the retest, you're looking for shorts or longs, depending if you are in the opposite case scenario. So that is basically how you incorporate and create a strategy around trend lines. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.